Büyümenin ve yatırımların finanse edilmesine bir bakış. Son dönemde pazarda yaşanan gelişmeler ve reel ekonominin durumunu konuşacak konuklarımız, evet, sol tarafımdaki koltuklarımıza davet etmek üzere. Öncelikle moderatörümüz Londra, İngiltere'den Blue River Varlık Yönetimi Yönetici Ortağı Sayın Fatih Aydın'ı davet etmek istiyorum. Moderatör koltuğumuza Sayın Fatih Aydın'ı davet ediyoruz. Kendisi İngiltere ve Londra'da bulunan Blue River Varlık Yönetimi'nin yönetici ortağı Sayın Fatih Aydın'ı moderatör koltuğumuz için sahnemize bekliyoruz. Bir başka konuğumuzu hemen anons edelim Sayın Aydın gelirken. Rönesans Grup eski başkanı ve uluslararası hukuk danışmanı Sayın Aşar Kureşi'yi davet etmek istiyoruz. Hoş geldiniz. Hoş geldiniz. Ve bir diğer konuğumuzu da anons etmek isterim. Guggenheim Menkul Değerler'den Amerika Birleşik Devletleri'nden kıdemli genel müdür Sayın Mark Walker da aramızda bulunuyor ve sözü moderatörümüz Sayın Aydın'a bırakıyoruz.
Evet, teşekkür ederim. Müsaadenizle İngilizce yapacağız paneli, misafirlerimiz yabancı olduğu için. Thank you very much. Ashar and Mark, welcome to Turkey and welcome to the IstanbulFinanceSummit. Obviously, the topic of our panel says it all, and given the economic conditions in the country and the financial markets and the situation that the country is going through, it is an interesting time to discuss this topic. As we speak now, also our minister is announcing our new economic model, which is also called the medium-term plan. And I think with our distinguished guests, it's important to get their ideas and to hear what they would suggest for the country to pursue at government level, as well as their opinions for the private industry. So I would like to ask Mark to kick off and share his opinions with us, especially given his experience and expertise on the sovereign level around the globe.
Thank you very much, Fatih, and thank all of you for inviting us to speak to you at this panel. What I and my colleagues have done recently is to look at Turkey from several vantage points. One, the vantage point of international investors and financial markets, which are reacting to, in large part, to what appears to be a currency crisis, or at least a rapid and large devaluation of the lira against other currencies, a lack of confidence, and a linking of Turkey with other emerging markets, starting with Argentina, that have problems of a different nature and arguably even more severe. From the standpoint of new investment, and more importantly, from the standpoint of returning Turkey to a stronger economic position and shoring up the financial sector, what we have focused on are 5 interrelated elements that we think need to be addressed in a complementary fashion. 3 of them relate to banks, and there's a related question, an ancillary question of the bank regulatory system and regulatory reform. And the last, of course, relates to the non-financial sector. And you can't address the problems of the banks without addressing their assets, and their assets, of course, are claims against the non-financial sector. Just looking at the banking system alone, there is the issue of non-performing loans, NPLs, which have been talked about a good deal, both in Turkey and elsewhere. A related issue is the capital adequacy of the banks and the question of whether the potential impairment of assets of loans leaves them vulnerable to a shortage of capital, and therefore leaves them potentially unable to continue to provide funding to the non-financial sector. At the same time, you have foreign-owned banks operating in Turkey with a significant presence in the banking sector, and to the extent that their foreign parents do not continue to support them, that will put further pressure on the availability of funds for the non-financial sector. And then lastly is the question, again on the liability side, is the question of funding of the banks, because to the extent that they cannot continue to maintain the funding they have, they will again be in severe difficulty. And the lack of confidence in the financial system, which starts with the erosion of the value of the currency, translates into an increased difficulty in maintaining funding. Turkey is not a country that has a sovereign debt problem. Public sector indebtedness is low and stable, but there is a problem in meeting near-term, short-term foreign currency needs, where something like $200 billion or 175 billion euros needs to be refunded or refinanced in the next 12 months. And that's a big challenge at a time when foreign providers of funds or providers of funds are looking askance at our emerging markets, and flows to emerging markets are slowing down considerably, if not turning negative. Complementary to that is the question of the regulatory regime, and whether, as banks face difficulty dealing with foreign exchange issues, funding non-performing loans and capital, they can get regulatory relief that will allow them to maintain a stronger capital position going forward, at least from a regulatory standpoint. And in a number of countries, particularly in times of crisis, it has been customary for regulators to be accommodating and to try to help banks to escape from the problems that they have. The assets of the banks, which are the source of the NPLs, because the bank's assets are loans that they make, need to be addressed both from the standpoint of the banks themselves, but also from the standpoint of the borrowers, which are the non-financial sector. So the non-financial sector is facing the same problems of scarcity of funding, the same problem of mismatching of currency, having revenues in local currency in large part, and liabilities in foreign currency, or in the case of the construction sector, a declining business, and again, the ending of the era of easily available funding at low cost creates more and more problems. So from the private sector side, you really need to have a robust and sensible scheme to allow private sector firms that are viable to restructure their debt, to restructure their businesses, to restructure their balance sheet, so as to preserve value in the assets. And if that's not done properly, then firms go out of business, unemployment rises, and the assets of the banks, which are the claims against these firms, lose a significant portion, if not all of their value, rapidly. In order to restructure debt, in order to enhance and maximize recovery, banks need a way to deal with non-performing loans. And one of the methods, there are a number of methods that have been used around the world, one of which is to create an institution like a bad bank to which banks can transfer their loans. Those loans are then managed by professional asset managers. It may be employees of the bad bank or may be outside managers. But the problem with that approach, which has been used in many countries but not in others, is that it requires banks to sell their assets at fair value. And in a market where non-performing loans are treated as toxic assets with very little value, requiring a bank to transfer those assets to a bad bank means requiring the banks to take large losses and large hits to their capital, which then creates a new need for capitalization of banks. There is a role for the public sector to provide assistance, and in almost, actually not almost, I think in virtually every country that has dealt successfully with the banking system, the public sector, whether it's the central government, the central bank, with its own resources or with borrowed resources, has played an important role. But there may also be a role for the private sector, private investors as well, particularly in joint ventures and a public-private partnership with the government. But there are timing questions, and I think other panelists can address those issues, because just as the banks don't want to sell assets at a very low cost, private investors don't want to buy assets at anything other than a very low cost. So let me stop there, and maybe we can talk a little bit more about some other aspects.
Thank you very much, Mark. I think this was very valuable, and it was a very good snapshot. Our policymakers are, I understand that they're also on top of these issues and share most of the opinions that you discussed. On this note, I would like to turn back to Ashar, and obviously, Ashar, you have a tremendous experience investing in corporates pretty much all around the world, as well as advising governments and corporates. So there is a sentiment in the country, and I think, you know, like for the audience here as well as the press, there's an interesting topic. From your point of view, do you think there is a reason to panic at the moment, or is it something easily fixable in the short term? And especially there are some certain industries in the country who are adversely affected, such as we all know, the construction industry and textile industry and such. What would you suggest, and what's your opinion in this matter?
If I may, Fatih, I think the answer to these questions is always between the two. To step back to what Mark was saying, you're not talking about something that is a systemic deterioration that can never be reversed. These are part of long-term cycles, and that's why so many countries have experienced them. And the point of government action or private action, whether you call it restructure, reorganization, or support initiatives, is to look at that cycle and to mute the downside and to preempt it, and then to preempt the ancillary damages. At the end of the day, it's never a true panic situation, because almost every country comes out of it if you have a viable and robust economy. And you have to look at some of the basic factors of the Turkish economy, its ultimate, if I may, demographics, young, highly skilled, trained workforce, technologically a very advanced workforce. So a very important part of sort of an industrial renaissance. So you always have those capabilities. Invariably in one of these downturns, there's sectors that are disproportionately influenced. Construction and real estate often being one, because like the banking sector, they become a proxy for investment and growth rather than actual anchors of growth themselves. They're an economic barometer, and therefore they go up very rapidly when the markets are well, particularly in the emerging markets, and they deteriorate very rapidly. I think what we're talking about in terms of government action and these initiatives is something that retards that sharp decline and accelerates the return upwards. It's all about trajectories, therefore it's never about panics. I think personally, it takes a fairly progressive regulator to take early action, because the action is not without pain. I also think that in the context of Turkey, given the intermeshing of the government and the influence of the government in the economy, and also because of the particular currency natures, a solution without governmental intervention is going to be a very half-baked solution. Even if we go down Mark's bad bank, good bank scenario, the need for public sector support and engagement is going to be critical. Similarly, if you go to the real estate sector, the need for government engagement in affecting an orderly resolution as opposed to ad hoc resolutions are very important. And the only thing I would point to is if you look at the way, whether it's individual assets have performed post restructuring or business sectors, you actually find that actually in a couple of years, everything that's been written off comes full cycle. You know, take the example of Portugal or Spain, where about 8 years ago, 7 years ago, nobody would buy in the real estate sector because they told you it was phenomenally moribund. You know, it was dead. There was a lot of pain. Maybe 100% of the pain wasn't taken. But now if you go to Lisbon or Madrid, you see a return in the cycle. The cycle, interestingly, in Portugal, has been much shorter than the Spanish cycle, and partly because the Portuguese government took the pain and intervened very early on. You know, I don't know, Mark, what you think about those, but it seems to me that that's really going to be part of the way that the whole story needs to unfold.
No, I agree, Ash. I think one of the things that's important to recognize about any financial crisis or any financial difficulty, if you don't want to use the word crisis, is that there are components of reality in the sense of real financial data, real financial aggregates, and you can look at measurements and say, this is wrong, that's wrong. But there's an equally and sometimes more important component, which is psychology and confidence. And recovery often depends more, both the speed of recovery and the perception of recovery, which is what, in fact, attracts new capital, depends, in some cases, more on psychology and a sense of confidence than it does on actual data points that would underpin that. And if you look, for example, at Mexico, just to take an example of a country that spent 10 years from 1982 to the early 1990s restructuring its debt year after year after year, on the public sector and the private sector struggling as well. And then in 1991, they did a deal that was thought to be revolutionary, but wasn't in fact very revolutionary. They restructured their debt with a very modest haircut, a very modest reduction in the principal amount, and in some instances, a reduction in the interest rate without a reduction in principal amount. From a financial standpoint, the savings, the net savings to the country was really trivial. And yet, the government participated, foreign governments participated, creditor institutions participated, and they all announced the era of Mexico's restructuring and debt problems are over. Nothing much had happened. And yet, all of a sudden, Mexico went into the capital markets within 6 months and started a boom of new investment, new borrowing, and new growth. So getting the right story, having a government program that is credible, and I'm assuming that the program that the government will announce today will be a credible program, are key elements to recovery.
Actually, if I may, Mark. The other bit that's very interesting what you said was the involvement of the international investor, because it seems that having them at an early stage, not necessarily in terms of new money, but in terms of the dialogue, and having them invested in the turnaround story is equally important almost than some of the technical initiatives that might affect them.
Absolutely, and in my opinion, on this note, there is money to be invested in the world. Investors are looking for right jurisdictions and good yields. Turkey, for more than a decade, has been a great target to invest in. And I think at the moment, the international investors are still, keeping a very close eye on Turkey. I'm not even going to say there is hope, because, there's not even a context. They're just, in my opinion, waiting for the market to converge to the correction. And both on the direct investment, FDI perspective, as well as the fast money, we are actually expecting, a good recovery, and in fact, potentially, better than early 2010s from an investor inflow perspective. And Mark, one question I wanted to ask you. You gave the good examples. Is there a bad example of a country who went through turbulence and didn't manage it well, and why?
There are lots of bad examples, I'm afraid. Look, I think you can look to a number of countries in Latin America which had what appeared to be a successful restructuring, a successful turnaround story, but the government really was never committed to sound economic policies. Once given the opportunity, it veered away from those policies, and the markets reacted quickly. An example recently, actually, is not from Latin America, but actually closer to the region, is Greece. We advised, the firms I was with advised Greece, and I was their advisor, financial advisor, in their restructuring in 2010-11. They had a lot of problems to begin with, but among the problems was a political problem, which was that the government was never really committed to reform. Every successive government was able to blame problems on the preceding one, and they were all right. And they had a disadvantage, in my view, that the policies that were being urged on them, indeed foisted on them, by the Eurozone countries who provided financial relief were policies that were required excessive austerity and were themselves inimical to growth. But beyond that, I think there was at least a conviction on my part that the central problem was political, and that if you don't own the policies, and if you're not really prepared to take hard steps, then it doesn't work. And Greece returned to the market with one issue. They had a modestly successful issue of medium-term securities of a little more than $3 or $4 or $5 billion. But their securities are still trading at 400 basis points above bonds. They're by far the most expensive debt in Western Europe. And they're a country that really didn't do it right. So there are examples.
And again, on this note, obviously, as a Turkish citizen, I'm very pleased to say, you know, like, I believe our government is very keen for necessary changes. Even the name of the plan that's being announced now is the new economic plan. So there is something new, and the approach is going to be new. But on this note, Ashar, from real economy perspective and the corporates and companies perspective, there might be a question of sustainability. Excuse me. So at the moment, we see and hear that the corporate borrowing rates in local currency are changing between 30 to 45%. In my personal opinion, as a financier, this is not sustainable, and this is going to tighten. However, what would you recommend to corporates who need liquidity at this super high unsustainable rates? Should they wait? Should they stop the production? Or how typically would they survive in such conditions?
Look, I think that's a very difficult question, because it will be tied to corporate from corporate. And in many cases, it will depend upon the corporate's own nature of production and sale, and what it can do in terms of looking at its balance sheet and various sources of money. And you know, somebody who is, for instance, serving the domestic consumption market as opposed to somebody who's in an export-based business is obviously going to be very differently situated. But I think you need to step back from the problem for 1 second, because if I may, the point around the bad bank scenario or the NPL scenario that we just talked about, yes, there's a financial sector stability issue there. But the other issue with that is the focus of the banks on their bad portfolios, their anxiety about asset values, and their anxiety about impairment and capital impairment leads to irrational behavior, including artificially high interest rates or an unwillingness to lend. The creation of a structural solution, to my mind, is not just about capital adequacy and stabilizing the banking system. It's actually a much more simple thing. It's taking away a problem, putting it into hands of a particular expertise area, and then letting bankers get on with the regular day-to-day business of lending. And there, in a weird way, the care that the government needs to take is not to over-regulate or over-manage that lending to create an artificial relationship. Yes, there are mistakes. Obviously, one wouldn't be in the place that one is in unless there had been mistakes. So you have to learn from them. But unfortunately, what we can't engage in is the risk of huge pendulums of regulation.
And he touched base on regulation. I think this is something you would like to comment on, Mark.
Well, I think, as I said earlier, there is the regulation, at least in the banking industry, has as its purpose to provide two aspects. One, to make sure that the banks are safe and sound, that depositors who commit their funds to banks can do so with confidence, and also to make sure that the banking system is operated fairly and doesn't abuse the confidence that its customers have placed in it. So it's important that bank regulation try to establish to foster the soundness and solidity of banking institutions, which is why we have rules as to capital and rules as to liquidity to make sure that banks can respond in downturns. That being said, if the rules are too restrictive and don't take account of the fact that in times of crisis you can't operate in the same way. After all, the reason why you require a bank to have a high level of capital is precisely so that it can continue to function when, in the case of a downturn, that's when it uses its capital. So you don't want to say to a bank that has done a good job, developed the level of capital and liquidity in its assets needed, that the minute that the market changes and it has to make use of that, you're going to penalize the bank and tell it it can't do business, because you'll stop the bank from lending. And if you stop the banks from lending, then you're doing something that will undermine the banking system, but more importantly, undermine the real economy, which needs finance in order to continue to operate and to grow, which in turn will recycle back through a feedback mechanism and further impair the banks. So the purpose of having a lot of capital and liquidity is to use it when you need it, and not to say to the bank, well, you had 14% capital, now your capital is down to 7%, stop lending. That would be a big mistake. So flexibility and sensitivity to reality and, frankly, common sense are an important part of regulation. Regulation can also play a role in trying to help the private sector to the extent that there is limited experience in restructuring companies in a way that will aid their return to health rather than push them towards liquidation. And you can do that by having guidelines as to what constitutes a sound restructuring, and, as Ash said, making sure that professionals who know that business are doing it, and banks who are in a different business of making loans and evaluating credit can get on with that, are important. And there's also a role for regulation in that regard. And similarly, there is another aspect that we didn't touch on, which is how do you protect in an environment like this where the currency has lost an enormous amount of value very quickly, which is hardly unique to Turkey. It's happened in many, many countries. It happened in Indonesia, it happened in South Korea, it's happened in a number of countries in Latin America. How do you protect firms against the risk of further erosion of their foreign currency, which increases their liabilities in local currency terms? And there are, in fact, a number of government-sponsored programs that have allowed government agencies, typically related to the central bank, but not necessarily, to provide foreign exchange risk protection to the private sector that allow those firms to deal with an unusually large erosion of currency values. So it's another example of what Ash said of the role of government in helping the real sector to overcome economic difficulties.
Right. But I think it's important, Mark, there to remember that it's a role of support, not a role of absorption or nationalization, which I don't think is on the cards. I know that we were all originally supposed to speak for a little longer, but Fatih, I must admit, I'm very keen to learn what the government is doing right now, because as I understand it, they've announced right now in a live broadcast the new policies. I think that given the objectives stated, which is transparency, innovation, and stability, that we're going to see something very exciting. And maybe we should, wrap up and see what's happening in the real world rather than the panel world.
Exactly. I mean, few of you know that I love speaking, but when I have two professors on each side of mine, I'd rather like stay quiet and listen, and if anything, ask questions. Thank you very much for coming. I think we should close the panel by saying that changes are not necessarily bad. Regulations do not necessarily stay static. In the US, in Europe, in Asia, regulations adapt to market environments. There are multiple parties that dance together, and therefore there is nothing to be defensive, and we are all positive about the future of Turkey, and hopefully next year in this conference again we'll talk about how Turkey recovered, Mark and Ashar. Thank you very much.